Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. It is November 9th. It is Thursday. Today was a pretty decent day, very solid. We kind of started to pick up more in the PM, so we'll kind of go over the whole day, talk about what happened in the AM session. We were on live. I took, honestly, a fair amount of trades today. I took probably more trades than I thought I would take. What it take today? I think I took 1, 2, 3, 4, 5, 6. I think I took 7 trades today. So we'll talk about each one. And I think I lost one of, or I can't remember. I thought I took a trade in the AM that I got stopped out on, but I don't remember which one it was. I know the one that I got stopped out on right here, but I feel like I got stopped out on. I know this was the first trade that we took today, so we'll go over the ones that I'm sure of. But I could have swore that I took another, so I'm going to go back in the recording and make sure that I have all of them. So hopefully everybody's doing well. Let's jump right in and talk about what we're looking at. So going into the day, I did have a bullish bias. Again, using the overall external draw, I want to see us come to this high. Going into the morning, again, I expected to see exactly what has happened the last fucking 4 days, which is get a move to take that buy side, and we literally got it again right at the open, which every single day is pretty much we've been getting the exact same thing. So market opens, we get a big move to buy side, and then immediately flip to the downside. This is the point in time when me and DJ were sort of looking for shorts, but I kind of wanted to see more structure. So there was a short opportunity. I think there was a 1 minute fair value gap. Yeah, there was a short opportunity right here, but again, in my opinion, I think this was a little bit early because the action in the morning was not efficient whatsoever, in my opinion. We noticed that we started to sell off to the downside. We didn't end up taking the London low, but the sell-off was very slow. It was kind of back and forth, moving down and then wicking back up. If we look at the 15-second, you can see that the entry came back to the 1 minute fair value gap, had to move down. This is when I was looking to take shorts here, and then I missed my entry. I think I just hesitated a little bit, but again, second entry, we rejected this. Once this rejected, again, this was my short entry to see lower. Didn't end up taking this. Again, just kind of wanted to watch because I was kind of confused on where price wanted to go. Not really where we wanted to go, but more of, again, too early and not enough structure for me to enter this. So I was just waiting, but this wouldn't have been a bad short. Again, notice slow move to the downside. We don't end up taking low and end up forming an SMT with that recent low. So in the morning, we end up coming down. ES ends up taking the previous low. NQ ends up getting bought up. And this was the first trade that I took today, was actually just a little bit of a scalp long. And the reason for this is my model. This is a clean buy model to me. It doesn't matter what time frame I see it on. I much rather prefer to see it on a smaller time frame than a larger time frame. But again, if I see it, I will take it because it's a high quality setup. Price is fractal. So on the 15-second, we ended up coming down, again, forming this broadening formation, forming. Once we get this big move up, again, I'm expecting this to become low resistance liquidity run. We run this small imbalance to the upside, and then I noticed we have a nice bullish imbalance here, and I think we had SMT at the low right here as well. So once this fair value gap opened up, I said in the channel when we were live, or I said, if we don't end up taking this high and we pull back into this, I'm going to take a long, and that's exactly what happened. So we pulled back into this. I entered long. My stop was at the bottom of the wick, and then we had a nice move up, and then I took off all my contracts right here. Looking back, could have let some run. Absolutely. I mean, we had I didn't expect to see this massive move to all the way to the high. I really didn't. I did not expect to see this massive move all the way back to the high. And in the morning, I was kind of confused on what price wanted to do today, especially when we had this move because ES was nowhere near taking that high. So I knew that this was probably most likely going to be a manipulation move. And looking at ES, this was actually a really nice short setup because we ended up coming up, tapping this 1 minute fair value gap to the tick, and then ended up selling right off. And this is where that SMT was. NQ ended up coming back all the way to that high to take out buy side, but ES was nowhere near. So again, forming bearish SMT, being able to have the probability based off of, hey, are we going to most likely see higher? Are we most likely going to sell back off? And if you recognize, we have these equal lows on ES. We haven't taken them yet, so it's most likely that this is going to be a manipulation move on NQ to run back to those highs Again, it was kind of back and forth. We form SMT at the lows, we go back, run the highs, form SMT at the highs, run back, go to the lows, form SMT at the lows, run back high. And so today, it was kind of back and forth, it just in the morning. So SMT, this would have been a nice sell opportunity. I think this is the short that DJ ended up taking is on ES right here, and then ended up selling off to that low. So after this, once this high gets taken, I'm starting to think that I wanted to see a breakout to the upside today. I wanted to see us run to this high. And when we were here, I was expecting us. Again, we're 15, or actually, no, there's got to be more than that. Really? Only 15 points more away on NQ to take that high. So now that we got this move today, I'm kind of shaken up by it. Or I'm kind of like shocked by that we didn't end up taking that high. So we'll end up talking about that later on in the session. But so after we take this high, we end up selling back off to the downside, and I miss out on shorts. Or not miss out, but didn't see the opportunity that I want to see, right? There's no entry here for me to take shorts. Zooming in, selling all the way back off, really no pullback whatsoever, straight down to that low. Again, don't care to miss out on the trade. I'm not upset about it. If there's not an entry for me to take that setup, then I'm not going to take it, right? But again, it would have been a good setup. We came up, formed SMT at the high. Your recent high has been taken, so buy side, we get displacement back inside the range. We're pretty confident that we're most likely going to see the London low, which was these lows right here. So at this point in time is when I'm starting to really be bullish. Now, the reason I was bullish at this time is because those London lows, the draw and liquidity that I was originally looking for shorts, right? Because once we took this external buy side level, I'm confident that we're going back to take that previous session low, which is the London session. We have all these equal lows. We have 1, 2, 3, 4 around, right? 4 relative equal lows down here. This looks to me acting as clear sell side, which is overlapped with that London low. So that's when I was really looking to see price. Now that we come down and take this low, I remember so many people in the chat were like, Justin, why are you not looking for shorts right now? Why are you not looking for shorts? And I had a little spiel about understanding the probability, right? Again, your job as a trader, my job, our job, is when we're looking to try to understand where price wants to go, it's all thinking in probabilities. That's all that you need to be thinking of, is every single decision that you make, every way that you think in the market needs to be based off of probabilities, because that's all it is. If you're not thinking that way, then you're gambling. Because guess what? Technically, this is a form of a casino. We're at the casino right now. And guess what? I'm trying to play like the house. If you're going to try to play like the person that sits at the table and plays poker, and you're not thinking in the probabilities that's going to make you successful, you're going to end up losing money, right? So when we're end up down here at these lows, the probability of any sort of short working out after this London low is taken is significantly lower than it would be if I'm taking shorts up in this range targeting that draw, right? Because the objective has already been met. That's what we talked about today. When the objective is already met, you are now looking for the reversal model to target back to whatever the opposing liquidity pool is. And that's why you're waiting for the rejection, because I don't know if we're going to sell off here. I don't know if we're going to get bought back up. I'm not trying to predict that. I'm simply watching price action to then show me what we want to do. So at this point in time, I'm expecting to see higher prices. I'm expecting to see buy side of the curve, right? This was sell side of the curve. I'm expecting this to get bought up to that high. And I said that in the chat. I said I'm expecting most likely a pretty fast move up into this high because, again, London low swept. We've now swept internal here. We've now bounced off of a previous 1 hour imbalance, and we're now getting displacement up. This would be your first entry long. I know a lot of people ended up taking this long right here in this imbalance. Again, this is a great trade. This is fine. Stop at the low. Again, everything you would want to see here is perfect. Everything that you would want to see here, right? Internal swept, London low swept, bigger time frame imbalance, displacement back inside the range. The overall draw is higher. Fair value gap, right? This is what you would want to see if you are looking to take a long. So this is a great long. If you took this long, that's fantastic. At this point in time, I wanted to see more. Again, I'm a second entry kind of person. So I was waiting. I wanted to see us hold this imbalance. We did. We started to continue move up. But I didn't really see any sort of imbalance that really offered me anything. And on a bigger time frame, the biggest thing I was really watching for is this 5 minute to get ran through. Once this 5 minute got ran through, I was super confident, right? That's normally how I think. Whenever the opposing imbalance gets ran through, I'm very, very confident that this high is gonna become the draw, right? So now at this point in time, I'm looking to see if I can get some sort of entry. I'm waiting for an imbalance to pull back into, waiting for rejection, waiting for internal, right? And we end up coming up, forming equal highs, and then selling off. So I'm, again, at this point in time, I'm like, all right, we have equal highs. Most likely still going to go target those equal highs, right? So again, I zoom out. I'm like, hey, we have a 5-minute fair value gap here, and we also have an overlapped 1-minute fair value gap here. So this is where I'm really going to zoom in to price, and this is when I zoom into the 15-second. And I'm going to look for price to come back into this imbalance, right? The 1-minute overlapped with the 5-minute, and I'm going to look to see if I can see my internal model, which is come back to the imbalance, bounce off of this, right? Have displacement to the upside, and then look to see if I can take a long. So we end up coming back down. We tap the imbalance. We end up holding it. Once the first imbalance gets holds, right? The first bullish imbalance holds, right? That's the first entry. I then take the second entry, which was right here. I entered in long. Again, and the problem with this trade is I put my stop too tight. If I am entering long here, there's no reason for me to put my stop right here. Now, you might say it's hindsight. It could be. It really could be hindsight. But looking back at this trade, just to be safe, I probably should have put it at this recent low because we did end up coming back to that imbalance. And I ended up getting stop hunted right here. But we ended up coming back to this imbalance, holding the imbalance, and then got displacement back up. So right when we ended up holding that imbalance and then got displacement back up, I knew, again, what we talked about recently is understanding when and when not to re-enter. Understanding when it's most likely a stop hunt and when your bias is wrong, right? And a lot of the times, and I think that's more of an experience thing, but a lot of the times I see new traders will enter or exit and then enter back in and then exit and then enter back in. But the circumstances and the overall conviction they have does not allow them to be able to do that. And what I mean by that is I totally am for if you want to enter a trade and get stopped out and then re-enter back in because you realize you got stop hunted, that's fine. But you only do that if the model has not changed. And guess what? This now becomes a better entry than this because I have more confidence here than I do here that we're getting bought up. Why is that? Because we end up coming back down one more time and continue to hold even more bullish momentum and then end up bouncing back up. And by the time we end up coming back to take this high, I'm expecting us to this to just go straight up. Again, we're holding the bigger time frame imbalance. We're starting to get displacement. I now have even more confidence. There's more data that's backing my bias here. So once I see us come down, I get stop hunted, right? I should have put my stop at the low in the first place. We end up coming back. I'm waiting to see even more displacement. Right when we get this candle, I jump in long. I don't even wait for an imbalance because I know that we're probably going to shoot. I'm pretty confident. And again, looking at the 5-minute, the 5-minute looked so bullish. We came back, held this imbalance. I'm expecting, again, we're super bullish. All these fat candles. I'm expecting this to be a slow reversal. Again, just like that trade yesterday that we took, which was, oh my God, where was it? You guys know the one I'm talking about. Just like the one yesterday on the very slow retracement. Fuck, where was it? The very slow retracement to then see higher. I don't know where it was. But again, noticing the price action in whenever retracement we are. So a lot of the times what I want you guys to notice is when we say strong versus weak price action, if I'm bullish, I want to see slow retracements and I want to see fast moves higher. So whenever I'm have a bullish bias, I want to see when we have moves up, I want it to see quick. When we have retracements, I want it to see, and then boom, right? That's showing me that price is hesitant to go lower because we're slowly retracing. It's not like a fast move back down. It's a big move up, slow, right? There's not enough, there's no selling pressure here to make us run whatever imbalance we're holding. And this is most of the time, the best entries you want to take is when you see price slowly start to retrace into imbalances. When you see price slowly retrace into an imbalance, that means the stronger the bounce is most likely going to happen. So when looking at this trade, and I noticed the time in which we were slowly moving back into this, the time in which we were slowly holding this imbalance, I was expecting to get a pretty straight up move. So at that point in time, I wasn't really looking to take an imbalance. I just kind of jumped right in right when we got the move higher. Put my stop down here. And then, of course, ended up getting pretty much a straight up move to that high. And then ended up taking off most here. I didn't take off actually at this high because I was like looking at my other monitor and chat. But when I look back, we were up here. And then I took off my longs around here. Didn't let any runners go. Didn't let any runners go on this. So we end up coming up. Again, at this point in time, not looking to touch anything anymore, right? Not looking to touch. Now, I still would want to see us go higher at this point. Now, I could have left a long, But the only reason I don't really leave longs to, okay, I'll say this, not longs. I won't leave my runners to external draws unless it's a part of the range that we are in. Now let me try to explain this. When we are in a model like this, I am going to leave my runners to whatever is relative to whatever model I'm trading. This external high, I think we're still going here. I at this point in time, I thought that we were probably going to get a move still higher, but I'm not going to leave runners. I mean, again, it's not a bad thing to do. Like, you could have left a runner here. I mean, I wouldn't. I probably should have, just looking back. But when we're talking about relative price, this high isn't in relation with what price action is doing now, right? So it might give me bias, or it might give me a bias that the draw is there on a bigger time frame, right? When I zoom out to a 4 hour, I'm like, wow, this looks like, we probably want to go to this high. But when I'm trading the internal model, and my bias, there's nothing here is, or nothing on a bigger time frame is telling me to long, except for the model I'm trading on a 1 minute time frame, right? If that makes sense. So the reason I won't leave runners is because I'm going to take the profit that's given to me and juice out as much as I can, instead of leaving a runner to get stopped at break even, only when my runners have completely wiped out my already existing objective, which is we're at complete new highs of the entire week, right? This is high of the week. I don't know how much higher we're going to go. So I'm going to take what's given to me. And that's how I find that I make the most money is a lot of the times, if I do leave a runner, I'm only leaving like 20 to 10% of my position. That's it. And most of the time, it's like 10% of my position. Really not more, because I'm taking what I know I'm confident in. And when you start thinking of price and trading into taking trades, right? Entering and exits based off of what you think, or what price is going to do based off of the model and based off of the algorithm, and you're not thinking in relation to how much money am I going to make on this trade, is when you will see more consistency, right? I am not focused on making money. I am focusing on entering and exiting based off of whatever model is being shown to me. So after this, again, not really looking to touch anything. I'm expecting to see either we hold this and maybe see higher, but if we get displacement back inside this range, again, I'm looking to probably see lower. So there we go. We end up coming back up one more time, respecting the bearish imbalance, and then start to get displacement under this low. So now we have market structure shift back inside this range at this point in time. Hard time for longs here. We're most likely going to see lower. What do you think happens? This would have been another short setup. Anybody take the short today? Me, I did. Yes. Not me. No. So I know some of you guys did, because I was looking at it in the chat. So this would have been a solid opportunity for shorts. Again, buy side swept, displacement back down, imbalance, looking to see short. Again, target for this would be most recent low, and then any standard deviation or any runners. End up getting big sell off back inside this range. At this point in time, I'm watching. I'm really kind of watching at this point in time. Now, here is when it looks great. This is when I zoom out. Where are we here? This is an textbook, like literally textbook of a short setup. Literally textbook. You have external buy side swept on a bigger time frame. You have now internal equal high buy side swept on a bigger time frame, or on a lower time frame, internal. Manipulation move, displacement back inside the range, a beautiful retracement back inside a 5-minute fair value gap, as well as an inverse 5-minute fair value gap, as well as a breaker, which is now considered a unicorn entry model. Let me clear this up here so we can actually fucking see what we're looking at here. And I ended up zooming in, and I ended up taking shorts right here. At consequent encroachment of this imbalance, my stop was around up at this high, and I was looking to see new lows, and then mostly just new lows, not really looking to see any runners, and then maybe a couple contracts to run. I entered shorts here, and today I was shocked to see this move. It happened so fast. I remember the chat was going fucking crazy when this happened. I genuinely thought that Powell started speaking early. I thought that I forgot what time Powell was coming on because of how fast this move was. And I ended up banking on this. I ended up selling most of my position when we sold off all the way down here. And this was just I think I entered like my full position like a solid 30 seconds before this dump happened. Actually, let me see what the execution was. Can I see the labels? Oh, I think the day's already over, so it doesn't show me anymore. But I think I tweeted what it was, but I literally entered short like right here, right before this move. And this move wasn't what was this 30-day yield news? 30-day yield news did this. That is some straight cap. This to me is pure manipulation. And what I want to talk about as well though is you will start to notice when markets have moves like this, which are, you could say, a black swan event, if you will, right? If that's what you want to call it. You will notice when we get moves like this, which are fast, concise, you don't have any time to react, which it looks like, right, news happened or something. You will most of the time always see them align with whatever bias or whatever model we are in. If I'm going to show you this chart, would you pick anywhere else on this chart for the market to sell off like that? Think about it that way. Would you pick anywhere else in the day for the market to have a sell-off like that? No. This is the time. This is the time where you would expect to see a sell-off, right? Exactly what our entry model is, exactly what ICT Concepts is, market maker buy and sell models. You're seeing it right in front of your face of fucking algorithm playing your hand. And that's a great feeling. I would have shorted that if I was on the charts, G. That's what I'm saying. I shorted it too, buddy. But that it's cool to see how much you'll see shit like this happen. Again, I'm not going to say how much you'll see this happen because you really don't see it happen often. But when it does happen, a lot of the times you'll see it align with whatever the model is. So at this point in time, I'm pretty much out. I'm not really looking to see anything. I'm just curious to watch where the market is going to go at this point. Now, here, I drew in my standard deviation to give me kind of an idea of where we wanted to go. And notice where we end up bouncing here. Notice where we end up bouncing here. Again, buy side swept, internal swept, take whatever the recent manipulation move is, which is high to the low. Get a sell-off perfectly to the 2 to 2.5 projection on standard deviation. What have I taught you? What have I taught you guys? When we respect 2 to 2.5, what is most likely going to happen afterwards? When we come down to 2 to 2.5 on standard deviation, what is most likely going to happen if we hold the area? Yep, we bounce back to equilibrium of the entire range. So we come down. Again, I'm watching. Once I see this move, this little move right here, I'm like, oh, baby, we are going higher. I'm expecting price to go to equilibrium of the high in the entire leg move that we had, from the manipulation move all the way down to the recent low. When we come down to the standard deviation, I'm expecting that we hold this. We'll go back to equilibrium of this entire range. And then, most of the time, once we go back to equilibrium, we'll continue whatever the draw move is to, number one, whatever the external draw is, and then the 4 standard deviation. So then I took 3 trades in this move. 3 trades here. So at this point in time, I'm on the 15-second, and I'm kind of watching price. I don't really know what we want to do. We end up getting bought up. We're kind of all over the place. And I'm watching. Again, I want to see more structure. And I zoom out. I'm like, all right, this looks really bullish. We just tapped equilibrium. So I don't know if we want to go higher. I don't know if we want to go lower. But again, what I do know is if we were going to sell off, what's more likely is going to happen before we sell off? Probably a stop raid. So I'm looking to see if there is a setup short. What I'm watching is, number one, this is where I start watching. If this fair value gap holds and we get displacement out of this, I'm confident we're going here and I'm going to take a long. If this fair value gap gets ran through and we go lower, I'm confident we're going to go to new lows and I'll probably look for shorts. That's all my head's at this point. So I'm watching. I'm watching to see, are we going to get displacement up or down? I'm watching. Boom. Displacement up. I enter in long in this fair value gap. We get displacement up. We get an imbalance. I jump in long. Stop at the recent wick low. Looking to see a move higher. Gets bought up. Boom. I'm out long. That's all I'm looking for. Notice, that is all I am looking for here. Notice I am not looking to see us go all the way back up to this high. I'm not looking to see us go any higher than this high. Why is that? Because that is all this internal model is telling me. Because again, if I zoom out on a bigger time frame, what is this now becoming? This is now becoming a sell model on a bigger time frame. We still have this external low down here that is most likely going to come to draw. We have displacement. We're pulling back to a massive imbalance here. We've now stop rated this high. I'm expecting us to go lower, right? I'm expecting us to go lower anyways. So at this point in time, I'm watching. I need to see, all right, maybe I'll get a short setup. Maybe I'm going to get something. I don't know. But this is the action I thrive on. This is my favorite type of action to trade. You might be asking, Justin, why is that? Because I know a lot of you guys hated this. You saw this and you're like, what the fuck is going on? This action, why I like to trade it, is because when we get volatile action like this, it is efficient. We will come to an imbalance, we will hold an imbalance, and we will go right to whatever the next high is, or right to whatever the next low is. It is efficient, and it's quick. So again, this is not for the faint of heart. I highly, highly, highly do not recommend trading this if you lack experience. This is in an experienced scalping market. It's a scalper's market, and it's all just trading internal models. So then after that, we end up coming up. Once we get this displacement move to the downside, I'm like, okay, shorts don't look too bad here, and we also end up forming an SMT. So I end up taking a short stab. My stop was at the high of the imbalance. I entered shorts, looking to see us go all the way back down to this low and then possibly look to go see all the way back to this low as well. This ends up getting stopped out. And again, once I see this get ran through, what do you think's going to happen? Right when this gets ran through, look for the imbalance. It immediately inverse this position because I know, again, what are we probably doing? Going back to whatever the recent high is. This imbalance gets ran through. Again, holding the other imbalance on a bigger time frame, or actually same time frame, but holding the other imbalance, bearish, massive. Again, look how big this imbalance is. Whole thing gets ran through, displacement up, bullish imbalance, holds, enter in long, stop at the low, gets bought up, straight to the high. And then at this point in time, I'm like, all right, I'm done. I called it here, but there was an A+ setup that happened afterwards where I know a lot of you guys took, which was zooming out on a bigger time frame. Let me clear up the charts here now. This is an A+ setup for surely, and we'll talk about this. Let me zoom out here. So, once we end up coming back up here, I'm pretty confident that we're going to most likely go to this low. Now, what do I need to see happen if I am going to look to take a short here? I need to see displacement at least on a 1 minute, and I need to see some sort of break of structure to the downside. The reason I think that short that I took on the 15-second didn't work is because I was too zoomed in. I hadn't seen what I needed to see yet because we didn't get displacement on a 1 minute, right? I mean, actually, I guess we kind of did. We did get an imbalance, and it did, again, I'm totally fine taking that stop. I was totally fine with that, and we had an SMT. But then this is clear, right? This is what we really like to see, right? So a lot of you guys ended up taking shorts in this imbalance. Any sort of shorts, any really short in here is valid. I really don't care where you enter as long as you have good risk. If you're able to catch some sort of consolidation, some sort of imbalance, anywhere here, again, if I zoom into a 30-second, there's probably a pullback to an imbalance here. Yep, this would have been a fine entry. Any of these areas would have been good for you to enter. And then catching this whole sell side move. Again, buy side, sell side of the curve. But guess what? Buy side and sell side of the curve on a smaller time frame only works out when, guess what? It aligns with the bigger time frame model, which is this is now sell side of the curve. So not only is this whole entire move sell side of the curve, but this isn't a whole entire model in itself. Right? And when you start to get the best quality setups, the highest percent win rate is when you're trading the exact same model zoomed in, aligning those biases. Guess what? I'm bearish on a bigger time frame. We're in sell side of the curve. Let me look for an internal exact same model here and catch sell side of the curve because it's going towards whatever the external draw is, right? When you zoom in, and align all of these things is when you will get the highest probable trades. And then we end up selling off straight to the external low. And again, where do you guys think we end up going on this? Where do you guys think we end up going to after we take this low? Boom, 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 boom. And where do you think we bounce here? Just watch. Just watch. You think it's not precise enough for you? Watch. We're going. We're going. We're going. We're going. We're going. Market closes, and it's still going to do what we expect it to do. We're going. Oh my God, standard deviation 4. What is that? Oh my God, we're coming close to it. Do we think we're going to bounce here? Or do we think we're going to go through it? Fucking tap it. We fucking tap it. And then we end up bouncing. So, this is gorgeous. This is a beautiful chart. We love to see it. This is exactly what we would expect to see in price. And the importance of days like this, the importance of when we go back and do these charting sessions, the importance of when we can sit here and look at this chart and say, this is exactly what I'm fucking studying. This is exactly what I'm looking for every single day I come into the market. And guess what? I saw it again. And again, every day that we come into the market, every single day that we come and do these charting sessions, we are constantly building experience. We are constantly building confidence. We are constantly building conviction because guess what? We're seeing the same shit happen day in and day fucking out, and we are taking advantage of it day in and day fucking out. So I love to see shit like this because all it's doing is just giving me even more fucking confidence until we're ready to take fucking over. And you can see it in the consistency we've been having. You can see it in the fucking consistency. When you get to a level, conviction is the most important thing in trading. Hands down, in my opinion, conviction and confidence in your model is the most important thing in trading. Because once you have conviction in your own model, once you have conviction in the draw and liquidity, all you need is size and emotional control. That's it. All it is emotional control and for you to only wait for that setup. For you to have the discipline, for you to have the patience to only wait for that exact thing that you're looking for, right? And again, thinking in probabilities. There's no other thing that I need to be looking for except for the exact model I trade. A lot of new traders will come into the space and they'll get upset about moves that they wish they would have taken when in reality, that trade had no relation to your edge whatsoever, but you're still upset about catching it. Want to know why? Because you're not focused on taking good setups. You're not focused on building a confident edge. You're focused on catching a move to make money. You don't care what the fucking move is. And that's what we're getting out of your head. That's what we're wiping it away. Because that is a loser's mindset and that is how you will fail. When we come into the market every day and focus on seeing the exact same thing every day. Because guess what? This shit happens every single day. When you focus on building confidence with those, and going into the day trying to recognize when they happen, and you're not focused on taking just a bunch of trades, but only taking trades that align with your model, you will see your trading absolutely fucking skyrocket. And you can see it with so many people in this community. There are so many people in this community that have been in here for a month, more than a month, even less than a month, that they have completely changed their trading, their outlook on trading, their mindset on trading, just from listening to me and saying, guys, a lot of the guys, what it is so many people have just been taught bad habits. And my job is to get into your mind and scrub that shit out. Scrub that shit out and teach you the real way of how you need to be thinking. My patience is insane now. Love to hear it. Again, we're not focused on making money. The money will fucking come. And guess what? We're making money. Don't get me wrong. But we're focused on what's actually going to make us money consistently, right? So, great day today. Today was fantastic. I'm very happy with today. Does anybody have any questions on any of those trades? Uh, 2:23 p.m. 15-second fair value. Got market maker buy model. Can you check it out? Banked and pyramided to the high off of the internal sweep. Let's talk. Let's see. 2:23. Uh, this isn't bad, but I wouldn't be trying to play counter. Again, this is fine if you're going to trade. Yeah, this is fine because you're trading the internal model. Yeah, this looks fine. 223 though. Where was that entry here? Was there an imbalance here on a? It's not bad. I wouldn't give it a high, like an A+ setup, but it's not bad. Again, having conviction trading the internal model. Again, just like that long. Again, it's all based on conviction too. Like some people will look back here and be like, Justin, why the fuck you take a long here? I just have conviction with it. Even if it's a small scalp. Don't you think you overtraded today? A little. This is what I honestly think about overtrading. I only think overtrading is a problem when you know emotionally that you are being affected. Overtrading is only a problem when you are overtrading because you are emotional. So overtrading is fine. Again, like Johnny said, overtrading I believe is fine if you have experience and good risk management. I don't think it's considered overtrading. If you're taking like I took 3 trades in the span of 30 minutes. Took 3 trades in the span of 30 minutes. That's 1 trade every 10 minutes. For me, I don't think that's overtrading because I had confidence with each setup. I had good risk with each setup and I wasn't emotional. I wasn't over leveraged. I had good risk management. Everything that I needed to do was there. But the reality is most of you aren't doing that. Exactly. Also, some days we'll have more opportunity than others. You don't know what's going to be given going into the day. You have to watch and see. Like I didn't plan that we were going to get this kind of action, but when I saw it, I told you guys in the chat, I was like, this is the action that I thrive in. I didn't know this move was going to happen today. I didn't know that I was going to be able to take 3 trades right here today until it was in front of my face and I saw the opportunity, right? And that's when experience comes into play of being able to make those decisions because guess what? Every single day is not going to be the exact same day. And that's why experience is so important. Just 2 days and starting to start to see the market in another way. You're right. Thinking I'm making money isn't the way. Absolutely, it's not. So what makes an A+ setup is a model inside a model, higher time frame. We've talked about it a lot. Can someone link him the charting session where we go? I go over my whole A+ model. Here, actually, if you want to look at this too, I have a whole thread on this. This is my A+ model. It literally everything that model examples everything. Do you think think initial entry was risky? Thanks. No, I like that entry. I think that was fine. I like this entry. This entry's nice. Yeah, this is fine. This is 2022 model. I didn't even realize. Oh yeah, we had yeah. This looks great. How price action in the beginning of the year? Beginning of the year is fine. It's summer. Summer action is the worst out of the whole year. June, July, August is normally my least favorite months to trade. The start to mid August is when we start to clean up. Good expression. Bigger time frame balance. Anticipate the market. We don't try to predict it. SMT at the stop rate is more powerful. Always target the most recent high. Runners will for the external draw. Love it. Internal model sweep the lower time frame buy side stop rate. Displacement back towards the draw. Entry on fair value gap. Target internal liquidity. Our confident draw. Bigger time frame imbalance. Yes, love it, bro. This is great. I love it. Guys, I love seeing you guys take the time and do shit like this because I know that it's clicking for you guys. I know it is, and I see it every single day when I see you guys taking the same trades. How do you not care about the losses? Takes time. It took me I'm gonna be honest. It took me a long time to not be affected by losing, but again, you have to realize and you have to accept. It's more of the acceptance of it. Losing will be not only with trading, you will lose your entire life. Your entire life, you will always lose, whether it be in a business deal, whether you lose, by being late to work, whether you lose by, getting fired from your job. That is, you're going to take L's in your life, right? And in trading, losing is your job. Your job is to lose. Your job is to learn how to lose and how to keep losses minimal. So if you aren't able to take losses, that is one of the biggest problems you will have. Because if you don't know how to accept losses, that is right when the spark of emotion starts to kick in and irrational decisions are made. And that is when problems will arise. You have to be able to accept the fact that losing is a part of this game, and losing is totally fine. Losing is fine if you are trading the setups you should be trading. Because if you lose, a lot of the times you'll lose and be like, I looking back, I probably shouldn't have taken that setup, right? There was not really much, I didn't see exactly what I needed to see. But the times where you take a really good setup and you lose, you'll be like, dude, that looked great. And that's the times when you have to say, I'm happy with taking that loss because those are losses I should be taking. I am fine taking a loss if it is my setup, if it's a high quality setup. If I'm taking a loss and it's just some random long that I took, fuck yeah, I'm going to be like, Justin, what are you doing, dude? Like that, you shouldn't have never even taken that. But losing is a part of the game. And I think one of the things that you will start to do is accepting losses becomes easier when you know the loss was fine to lose. Losing is hard when you're taking losses you shouldn't be taking. That's the difference. Losing becomes a lot easier when you are losing on trades that you are okay with losing. They're good setups. Was this too late? No, not at all. Not at all. Again, I said anywhere here before this low is taken is good for shorts. Anywhere here. Grateful to know someone like you. You changed my life trading. What I've learned from you is more than all ICT playlists. Much love, brother. That means a lot. Took a long in the inverse of this. Thoughts? We didn't run this. This fair value gap never got ran through. Again, there's not a single candle close above this. I don't think there's no long here. And we never bounced on a bigger time frame imbalance. Again, if you were to wait for the bigger time frame imbalance, then wait for the displacement, then wait to take this inverse, boop, boop, pull back, hold, then go, that would have worked because you have bigger time frame imbalance holding and you have a stronger pullback. This is too early. This imbalance never got ran through. You trading tomorrow? Yeah, I will be. On the A+ setup, which time frame are we looking for an imbalance? Somebody let them know. What is the sign that we are on buy side or sell side of the curve? It doesn't have the market maker curve to it and the original consolidation. Would you wait for a key PD rate to be violated to determine that? Yes. Great question. That's what I'm looking for. If it's not clear to me that market maker buy or sell model is starting or ending, whatever it is, I'm always looking for, number one, are we in a bigger time frame imbalance? Does it make sense for us to bounce here? Does it make sense for us to sell here? Right? On whatever, wherever we are in price. That's number one. I'm thinking about, is it logical for us to bounce here? Right? Just like this morning when I'm looking at everybody being like, oh my God, Justin, why are we taking shorts here? Blah, 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 blah. And I'm like, dude, this is going to be buy side of the curve starting soon because everything that is needed to happen, it is more likely for this to bounce than it is for us to keep selling. Why? London lows have been taken. We're in a bigger time frame imbalance. And I have to recognize that. That gives me the confidence to say, hey, guess what? We've now sold. Sell side objective has been taken. We're most likely going to start buy side of the curve. But if I'm not confident, I'll wait for the first displacement move, which is right here after taking the internal low, and I'll wait for the first imbalance to hold. Once this first imbalance holds and we start getting displacement, I'm confident that this is now buy side of the curve. And if I want to see even more, I wait for the bigger time frame for value gap to get ran through, which is this 5 minute. Once this gets ran through, it's game over. I know we're going to whatever the recent high is. And again, a lot of you guys get stressed out from not entering here. Guess what? You don't need to. Because guess what? I'm way more confident taking longs here than I am here. So that's why you'll see me a lot of the times. If I don't like this choppy action right here, I'm gonna wait for that 5-minute fair value gap to get ran through because I'm gonna be even more confident in taking longs that we're going to this high than I would be down here. Because guess what? I'm still gonna get good risk. I'm still gonna get good risk to reward on an internal model. So I don't really care to take a long down here trying to catch fucking 80 points, right? I don't need to catch 80 points. All I need is fucking 15 points, right? That's all you need. That's all you need. I lost money today when everybody banked, and when I stopped away, A+ setups showed up, and I wasn't looking. I feel that I now need to look at the charts 24/7 and feeling FOMO. Any advice? Brother, zoom out. It is less than 24 hours since you looked at the charts and realized that you missed an A+ setup. Less than 24 hours, brother. And you're acting like your life is over. It's just another day at the office. There's going to be another market's going to open the exact same time tomorrow morning, brother. And the day after that, and the day after that. There will always be countless opportunity. There will always be us in chat, on live, taking trades together. There's always going to be me and DJ talking shit, right? There's always going to be us. There's always everything. So you have to get FOMO out of the way. And trust me, I struggled with it I used to struggle with it a lot, right? I would miss setups and I would get upset about it. But again, when you get upset is when you realize you're focused on making money. Because guess what? I got upset that I missed a setup. Oh my God, I could have made like 2 bands right here, bro. I could have made like 3K off that trade, bro. Guess what? You want to know how I think now? Oh, I missed that setup. But dude, hey, guess what? I get to see exactly what I thought was going to happen. And guess what? That's fucking great. Exactly what I thought was going to happen happened. Guess what now? Now that's getting cycled into my brain, and I'm like, wow, I'm building conviction by doing this. I don't care if I didn't make money on this. I just added another fucking sample size to my arsenal of fucking conviction in my head, right? It's all perspective. It's all how you look at it. I do not care to lose, make money, anything. I don't care. Money is fucking subjective. Money is a fucking fairy dust in the sky, right? I really don't care. I care about the chart. I care about the market. The money is simply a number on a screen. And when you get to this level of detachment, because that's all it is, it's detachment. And when you are primarily dialed to the market and you are in tune, you get to a flow state. When I trade and you guys wonder how I'm so good at like talking about what I'm looking at or talking about, it's because I'm in a flow state. I'm watching the market and I'm looking at every second because every second is giving me more data to then give me a new bias, reflect on that bias. Did this change my bias? Okay, now let me reevaluate this. Okay, now that this has happened, I now think this is going to happen. Does that give me the chance to take a trade? No. Okay, now I'm going to wait even more. Okay, now that this has happened, let me even wait more because I'm going to see this. Okay, now this has happened. All right, that original bias that I was going to take a trade, can't take it anymore because now this has happened that has invalidated that bias. That's all it is. That's all it is. That's how my mind works when I trade. That's all it is. It's all probabilities bouncing off the fucking walls. Enter on the inverse fair value 15 second after all London SMTs were taken. Yeah, I like this. I pretty much took I was more comfortable taking the long down up right here, but if you want to take it here and you're confident with it with the SMT and the sell side, it looks great. For your trade at 11:30, I was waiting for the 5-minute fair value gap below to get filled. Any tips on reasoning why price didn't go there first, then pump? I'm guessing it was this one. Is this the one you're talking about? 11:30. Yeah. We have 2 imbalances here. Why am I not looking to take longs in this imbalance, but I am looking to take longs in here? And guess what? It's not that I'm not looking to take longs there. It's what I'm looking to see which one is being respected. Because guess what? If we want to come down here, this imbalance will get ran through. Did it ever end up getting ran through? No. So again, that's why you zoom in. Because from this chart alone, I don't know if we're going to come down to here and hold. I don't know if we're going to come down to here and hold. I don't know. So I'll zoom in, and I get so much more context from this because guess what? I now get to see the internal model. I get to now use this as my high-quality setup, which is, what's the first thing I would want to see? Rejection of a bigger time frame imbalance. Guess what? That bigger time frame imbalance is that 5-minute fair value gap now. So I zoom in. I'm looking to see this get respected. I don't know if this is going to hold. I don't know if we're going to run through this to go to this fair value gap. All I'm looking to see is I'm looking to see it hold, and I'm looking to see displacement up. That's all I need. That is giving me validation that we are now holding this imbalance, and we will go towards a draw. Does that make sense? Daily bias is bullish. Should we take shorts here? I was dying laughing this morning. Justin didn't have his coffee this morning and was letting everyone have it. He is as real as they come. We stayed patient and banked. Justin proved today that everything he teaches is valid and legit. All you have to do is listen. This man is changing lives. Might as well call me the Federal Reserve with all the money I'm printing. Much love. Much love, printer. That means a lot, brother. Yeah, hey, you guys, I didn't have my coffee. I was cranky. I was cranky. This is the 4-hour heading into tomorrow. Hard time frame. We're busy for like condition. We're about to get into that. We're about to get into that. Good evening, brother Justin. Real quick, my predicament at the moment is I'm only able to trade on the first hour of market. Open distractions feel free, but sometimes with newborn strapped on me. Anyways, my question is, how would you maximize learning experience with live price action with only 1 hour screen time daily? I understand it's probably gonna be more time. Thank you, sir. Now, again, if you can't change your conditions. Again, you have to play the cards that are dealt. You have to play the cards that are dealt. If you can only trade 1 hour a day, make sure you're trading 1 hour every single fucking day, at least as much as you can, right? And if you can try to get more and change schedule, that's great. But do what you can, right? Play the cards that are dealt. And trust me, 1 hour a day is a lot. 1 hour a day, if you're consistently doing one a day for a year, every single market open, every single time you can, trust me, that is going to start to really build up. Took longs on this proportion ball. What do you think? Right here? Yeah, this is fine. I like this. Again, this would be the long that I would most likely take, is because once this first imbalance gets hold, recognizing bias of the curve, this looks great. This would be a great long. Yeah, I like that. How'd you deal with the point in my life while you're working and having to trade during market hours? I run a business, and sometimes being in that environment while trading causes some mental stress, but I try to hold it together. Still, sometimes it's the back of my mind that I have to do other stuff to manage. Meditate. Start meditating. Something that has helped me a lot is I started meditating pretty frequently at the start of this year. And my mind has become clearer. I've become more relaxed, more calm when I trade and in my day-to-day life. I don't get frustrated often. I don't get flustered often. Now, you might see me, this is just, I get passionate. That's what, I don't think I get heated. It's passion when I start like getting yelling and talking fast. That's just, I fucking love to do this shit, right? This is my fucking life. Liquidity runs in my goddamn veins, all right? But I highly, highly recommend starting to meditate. Just 15 minutes a day. Yeah, it looks good, Yossi. What are macros? I get there in a certain time and their manipulation and so on, but can you specifically explain what they are? It's like time or price. Macros are I like to think, okay, my macros are pieces in time. They're windows. That's a great word. Windows in time throughout the day where the algorithm most likely, again, it's not certain, but most likely is when the algorithm will push price. Now, push price could mean multiple different things. Push price could mean run to buy side, sell side liquidity, could mean rebalance to an inefficiency. But a lot of the times, macros are areas where we want to see opportunity. In a big imbalance on a higher time frame, do we look for lower time frame imbalances inside that big imbalance to look to trade? Bingo. There you go. Fractal price, brother. Models inside of models. You zoom in. Can you teach us how to use macro time? How can we get it? I just have an indicator for it. These are all the macro windows. Again, notice the manipulation macro when we opened here. Manipulation macro from 1050 to 1110. What do you think happened here? Right when this macro opened, the entire day we're slow. Macro opens at 950. Right when it fucking opens, we pump to take this high. And then right after, we sell right back off. This entire window, 1050 to 1110 is when we had the action, the manipulation macro today. And you can see it. Manipulation at high automatically sells all the way back down to London low. But I just have an indicator for it. Is BPR something we should leave open or be used as an inverse fair value gap? Or be used as in a fair value gap? Yeah, BPR, again, if there's a BPR market, I mean, it's the same thing as just marking the regular fair value gap. Best time of the day. I wait for this more than I wait for the market to open. Thank you for putting all the efforts and teaching us, changing the game for real. Much love, Mo. Guys, I fucking love what I do. Again, it's not a job to me. This is my passion. When you love what you do, you don't work a day in your life. Is it a good idea to get those indicators you have? And yes. So the indicators I have, I plan. I'll make the charting video. All right, it'll come out this week. Trust me, I'll film it tomorrow. I pinky promise. I have ICT kill zones and pivots. I have macros. I have new week opening gap, daily opening gap, and then I have ICT everything, which I don't really use this actually. So let me take this off. But pretty much just macros and kill zones is what I use, and I just flicker it on and off when I want to see where we are. All right, let's talk about what we're looking at going into tomorrow. Let me clean up the chart a bit because I have a bunch of shit going on here. All right. Actually, fuck, I'm going to keep some of that shit on, actually. Okay. Because I do want to keep this and go back. All right. So, going into tomorrow, again, zooming out to a bigger time frame, where are we? What am I focusing on? Well, daily fair value gap. Starting to run it. We could end up wicking this. That is a possibility, so do keep that in mind. We are also still in this 4-hour fair value gap. So, can someone send me the model for what we expect to see probably tomorrow, which is the Thursday manipulation, Friday expansion? I know somebody has it on deck. I knew it, Jiffy. I know you had it on deck. This is exactly what I'm most likely expecting, which is consolidation, Thursday manipulation to low, take out that low, rebalance to price, and then Friday we normally have TGIF Friday model to continue to whatever higher. So again, I am bullish going into tomorrow, but it is more loose because I don't think that this move is going to immediately get bought back up because we can still go lower to this daily imbalance. We absolutely could go back to this daily imbalance. So I'm not super bullish going into tomorrow. I am more loose bias, and I'm expecting and watching to see what happens in the overnight session. But I do want to start to see this move get back up, start to form more structure. If I'm being honest, I expect Friday morning to probably be slow, and then later lunch PM is when we'll start to see the reversal. But again, it really depends on what happens in the overnight session. Because right now, where we're at, I'm not looking to touch anything of where we're at. We need, after seeing this big move here, we need a lot of structure, right? A lot of structure to really validate what we want to do. So depending on what happens in the overnight session is what's really going to form my bias going into tomorrow. Yeah, depending on what happens overnight, because again, we either disrespect or we hold. If we disrespect this fair value gap, I'm expecting us to go to the daily imbalance. And back to the previous weekly, or this week's opening gap, actually. All right, guys, that is all I have for you guys tonight. Great session, great day. Fucking killed it once again. This week has been, again, another great week so far. We're on one. The consistency is insane. Let's keep it up. Keep going. Again, every single day we are coming in, building good habits, being patient, being disciplined, coming into the charting sessions, reviewing, focusing on what we need to focus on. This is gaining experience. This is gaining conviction. This is putting in the fucking work, baby. This is the best fucking community out there. We are absolutely killing it. So enjoy the rest of your night, guys. If anybody has any further questions, always feel free to at me in the Discord and I'll get back to you guys. So enjoy the rest of your night, guys. I will see you all tomorrow morning. Let's end the week off strong. All right, boys. Peace.